Okay. Well, thank you, everybody. I'm actually talking to everybody right after lunch, so hopefully I won't bore everybody. I actually see myself on screen, which is disturbing. So, I'm going to start. In a minute. There we go, perfect. Okay, well, thank you, everybody, especially, again, coming here after lunch. I'm going to talk about the impact, economic impact. Again, a lot of this data is from the impact of cryptocurrency adoption on governments that the GBA released in April of 2021. So it should be very interesting. Before I get into that, I'm going to talk about AML KYC, which is very, very important for cryptocurrencies and blockchain type technology. It's what a lot of the governments are focused on, from anti-money laundering, obviously know your customer, combating finance and terrorism. So let's talk about that. So what exactly is AML, right? It's the act of just converting money, illegal money, fraudulent activity money, into something that's actually legitimate funds. A lot of the there are traditional ways of laundering money and actually putting it into a dryer and stuff like that, cleaning it up, right, making it look dirty. But there's also ways where in traditional they bring money that's illegal and go to casinos and gamble it away, right, and it comes out clean, right, just mixes it all up. The privacy coins and the tumblers do the very same thing, but a lot of these laws actually focus on that. So the next one is KYC. What is KYC? It's the process of identifying and verifying clients. Is the bottom line. And some of the history behind that, AML KYC, the Federal Deposit Insurance Act was one of the ones with Know Your Customer. The Bank Secrecy Act, again, AML KYC to understand who you're doing business with from a banking standpoint, and they still use that today. The travel rule is based from the Bank Secrecy Act. And then the Money Laundering Act, we can actually thank Pablo Escobar for that. After, the U.S., and I don't know if the whole world, but maybe the U.S. went after Pablo Escobar, they came out with the Money Laundering Act because of a lot of the stuff that he did. If you're ever interested in learning about Pablo Escobar, I think you should, because a lot of stuff he did, if he was doing it legitimately, would be actually a good business. But he did everything illegally, and we got the Money Laundering Act out of it. So that's, thank Pablo for that. And then the U.S. Patriot Act, after 9/11, we came out with the U.S. Patriot Act. And that still deals with AML KYC. And then I talked about earlier during the regulatory impact, the AML D5, the fifth direct added to the AML regulations in the European Union. A lot of all these acts actually deal with you're looking at cryptocurrency and actually seeing if there's any illegal activity out of that. So let's talk about the AML KYC, the AML D5. So the AML D5 essentially demonetizes the person selling and buying and trading cryptocurrency. That's the big deal about it, right? So you actually know who is actually exchanging the information on the blockchain and the cryptocurrency from the cryptocurrency aspect. So you could actually, instead of synonymous, it becomes anonymizes, de-anonymizes it. So regulated exchanges, all the regulated exchanges out there are subject to AML KYC laws. Regulated exchanges are required to report suspicious activities. So that's why you see, I think Binance got hit with they weren't following certain AML KYC laws. So Binance got hit with a penalty. I think people were starting to stop, trading in their countries based on that. Coinbase obviously is the big one that went public IPO. It's being subject to these laws. All the cryptocurrency exchanges are going through AML KYC compliance. So thing about it, just like with financial institutions, compliance to AML KYC is expensive and also anonymity is no longer available to privacy advocates, which is interesting. And again, if you look at GDPR and also AML and what blockchain technology has to offer, it kind of puts it on its head. So it's interesting how those AML KYC and GDPR kind of conflict. I don't know if they're going to fix it or not. I haven't heard any news on that. And then AML KYC is needed to protect, obviously, consumers, right, from ICOs. Early on, there's been a lot of, when ICOs first came out, a lot of pump and dump schemes, a lot of front running. And you hear it, people, I don't know, maybe Elon Musk does pump and dump, I don't know, but he sort of encourages, the up and down of Bitcoin or Dogecoin, and, people just go crazy either buying it or selling it. But I wouldn't put him in that category. I'm sorry, Elon Musk. If he sees this, he's gonna say something about us. But the whole thing is, the whole AML KYC is supposed to protect consumer finance or consumers from this type of fraud. So going on, so the AML D5 details. So the cryptocurrency service providers face the same regulations as the financial institutions that have been trying to have compliance with these laws for a long time. So now the cryptocurrency exchanges are in the same boat as the financial institutions. And enforcement units may obtain identities and addresses of crypto owners, and any suspicious activity reported. So any exchanges, if you have an account on exchange, any exchanges actually can send law enforcement your information, because they have to comply with these type of laws. Any existing or new cryptocurrencies must be reported to regulated authorities. That's another thing, anybody that comes up with a new cryptocurrency. One thing, I had a side meeting with Sandu Bhaskar outside, and there's something we haven't talked about, is the community tokens that are going around with local communities, which is interesting too. I don't know how if they're subject to any type of AML KYC laws, but it's something that I haven't heard a discussion or a presentation on, the community tokens that are all around all around the world right now. I'll be interested to see where that stands. So the bottom line, any regulated exchanges must comply, or essentially they get shut down. So getting into, let's talk about some of the outliers. And we're going to talk about unregulated exchanges, regulated exchanges, and decentralized exchanges. Already talked about mostly about the regulated exchanges before the previous slide. So this one has to do with unregulated exchanges, so also known as straight-to-market exchanges. They offer futures trading on cryptocurrency markets. They're also consumer-led, which is interesting. It's influenced mainly by speculative investing on these unregulated exchanges. And again, the interesting part is they're not supervised. They have little or no oversight by any government institution. So essentially it's, play at your own risk, right? So they have shaky past, as I said before. AML KYC is supposed to protect consumers from pump and dump schemes and scams and fraud and front running. And the same thing with here, they have shaky past to unregulated exchanges for that purpose. And here's one example. The second bullet to the bottom is, I lost my place, sorry. Has to do with, hold on, I'm way past it, I'm sorry, I lost my place. But with the regulated exchanges, hold on. Jeez. Hold on, there we go, back. Where was I at? Oh yeah, second to last screen. Individuals can buy the Bitcoin on over-the-market counter markets and then dump the price on a regulated exchange and sell them. So again, they can pump it up. Increased fraud has led to state and government regulations issuing cease and desist letters to a lot of these unregulated exchanges. What's interesting is, the technology is decentralized, right? You have the whole decentralized aspect, but all these exchanges actually centralize the process, right? So you can go after them. And then, the unregulated exchanges, you can actually find the servers and down them, right? Which is kind of weird, goes on the head of the whole point of decentralized information. Now you have the decentralized exchanges. It goes back to whole DeFi and how can you actually regulate them? Yeah. Sure.
Brian Nielsen, chairman of the GBA. But the question I have about that prior slide was purchasing Bitcoin or cryptocurrencies over the counter. Would that include like crypto ATMs and things like that? And is there going to be regulation of crypto ATMs?
Well, the ATMs, again, so just again going back to I can give you an example from the paper, especially what's happened in Japan. So anybody that has a crypto ATM, they're subject to the same type of laws, right? And a lot of the crypto ATMs that are being, I guess, released into the public or being, distributed into the public, they fall under regulation in Japan under the PSA, I think 2019 Act, where they have to register those ATMs. If they don't register those ATMs, they can go after the person and actually shut them down. But actually, over-the-counter ATMs with Bitcoin, it's not like that. It's like over-the-counter derivatives for stock market, right? You can actually go out there and buy it at a certain price, right? Or you can pump it up, right? You can pump it up at a certain price and then sell it on an off-market exchange. And that's what's happening with these Bitcoin unregulated exchanges. There are not as many out there, but they are out there still. And they'll eventually, it's like anything else. It's like, you guys remember Pirate Bay, right? Decentralized Pirate Bay, you can download music and all types of stuff on it. They would bring down one server in, I don't know, Switzerland or something like that, and it'll pop up somewhere else. So the same thing with unregulated exchanges, they do the same thing. And, it could be used for nefarious activities, you just don't know. But they pop up and down all the time. So hopefully I addressed your question. So with the decentralized exchanges, they're distinctly different than regulated exchanges, right? They have unique properties and that present challenges, obviously, to the regulators. And what do you think that is? It's run strictly by software. There's no one they can go after, right? You program it, and it executes based on programming, and people buy and sell direct to consumer to consumer, or consumer to product. Another question from Brian? Did he take the microphone away from you? Yeah. Okay. And one thing about these centralized exchanges, they don't hold any funds or manage order books.
Again, Brian Nielsen, Chairman GBA. So the question I have on the decentralized exchanges, you just said that there's no one that they can go after. They can go after the people who coded it. I mean, there is liability in that also, even though they may or may not be receiving remuneration from what they've created. There was something that was exchanged for their efforts.
They can try to find the person that does it, yeah. Maybe they can go after an IP address, I'm not sure. They can bring down websites, right? Find the IP address, find the service provider, and stop it from there. But if something is distributed. So I don't know how they stop the person. I guess they can go at it. It's kind of like catching hackers. You got to follow, because you can say follow the money, follow the trail. I guess they can eventually find people that do the decentralized exchanges. But it'll take some time. It's cat and mouse game, right, between authorities and people doing it. And, if someone wants to bring up a decentralized exchange, again, you just have to somehow stop them, I guess. The regulators, if they don't want them out there doing bad stuff, they have to somehow stop them. It's like network administrators looking at all the data on the network, right? There's so much data. You have to pick somebody that's actually, you got a tip or something that this person's running a bad internet site, or they're running a bad exchange, they need to be tipped off. Or it's like finding a needle in the haystack. There's so much stuff happening out there. A lot of legitimate, a lot of not legitimate, right? So moving on. So with decentralized, thank you for the question, Brian. So all the transactions directly settled on the exchange, like I said, that's a consumer to buyer, but buyer to seller. And it presents challenge, again, like I said, there's no centralized group held accountable. No personal accounts on which to enforce KYC and AML, because they just don't follow that. It cannot be blocked or taken down easily, just mentioned that. And it provides the ability to convert cryptocurrencies into other type of currencies without regulatory oversight. Right? It could help entities avoid international sanctions. I think that's an interesting use case there. I don't know if it ties into something like a DAO, right? But it's interesting. And I don't think it will go away as we keep on moving forward with decentralized finance. And that's it from, I know Brian asked those questions, but that's it from just a AML KYC. And I just want to know who's ready to start a crypto exchange now. Anybody decentralized? Yeah. Is there any other questions? I know Brian asked the questions. Any other ones before we move into economic impact? Brian?
So when you said that you don't think that the decks are going to go away, so how are we going to enforce anything from a regulatory standpoint as it impacts consumers and trying to eliminate, issues with nefarious, that was the word you used.
Yeah, nefarious.
Actors. How do you go about then managing that from a regulatory standpoint if there's really nothing that we can stop?
Yeah.
I mean, we know some of these exchanges, Sushi Swap, Pancake Swap, these are all DEXs that exist, but we also know who they are. And there's other issues that you brought this up in your earlier presentation about the security coins, where they actually go through a blender and try to misalign ownership. So, what is the regulatory perspective as it's going to relate to these challenges?
Yeah. So from a regulatory standpoint, again, I believe it's hard to, if something's decentralized, hard to put some kind of regulation around that. Because just from I guess from the past, any type of new regulation comes out, and this has to do with big corporations, right? They have a bunch of lawyers, a bunch of smart people that actually see the loopholes in the regulation, because regulation, I guess, is purposely not quick to change, right? I guess there's a reason behind that, because a lot of regulation takes a long time to change, and people find holes in it, right? But with this technology moving so quickly, regulators trying to keep up, by the time they have some type of regulation for decentralized finance, something's going to change. I mean, there's people, there's good people trying to do good work on it, and then there's also the bad people, whether it's state-run or locally, run within a country, that they're smarter. There's a lot of smart people out there that will eventually see the holes in this type of regulation or policies and laws and find a new way of doing this. Maybe it moves to space. I don't know. Maybe it's the IPFS, right? Interplanetary file system, yeah. So, I mean, there's always something happening in the future to stop or go past these regulations. It goes back to a cat and mouse game, just like, the cyber experts and hackers. Eventually, there'll be, the regulators will be playing a cat and mouse game with a lot of these decentralized systems. So, and again, it's not all bad. I think it's for good, but a lot of times when we talk about this stuff and learn about it, we see bad immediately. What's the bad in it? So, or I guess you asked the question if you're glass half full or glass half empty. Is that it, right? Or just glass totally empty? I don't know. But any other questions? No? Oh, yeah.
Bryant did 3, so I figured I got to do 1. What do you see as a way for these exchanges to stand out as towing the line to try to be in regulation versus trying to walk outside of it? Are there any that are doing a good job of, Binance is a great example, why they were able to get approval here in the US versus somebody else? Is there ways in which, we can support some of these non-nefarious actors to make sure that they get the leverage that they need to show, hey, a majority of us are trying to do well? How do you identify one that tends to be more likely to be a better decentralized exchange than something that could turn into something that is probably negative and you don't want to be connected?
Yeah, I would think you go back to regulation. So if you want to make sure you're not shut down and hit with fines, you'll have to work with the regulators, right? So if you want to set up a decentralized exchange, I think you'd have to work with the regulators to see what's right and what's not, right? There's a lot of people that got burned, right, with creating their own ICO, and all of a sudden the SEC comes after them and they get hit, right? But the centralized exchanges, they follow the AML KYC because they're basically getting regulated like a financial institution. The New York, as I mentioned earlier, the New York Department of Financial Services has the BIT license, right? And that's it's really stringent to work with or operate a crypto business in New York. And Circle did it, right? So did Paxos, and I think it goes back to Kraken and all the other ones, Gemini. But I think in order to go forward, and I think there's a lot of good that can happen with these exchanges. And again, I think they'll have to work with the regulators to see how they can, I guess, pass the laws, pass regulation. It's going to have to be a partnership. So I think it's interesting to have, so the banking industry is, obviously struggling, right? I talked about the non-bank, money service businesses, right? Making more money right now than a lot of the banks, right? So I think that it would be, if you want to actually help with regulation of the crypto markets, you need to bring the crypto groups into it and have a discussion, which is probably, again, puts it on its head. Remember, the bottom line behind Satoshi Nakamoto is peer-to-peer exchange, right? And what the governments are trying to do with this technology kind of flips it on its head, right? So it's kind of, you have the people that, the cypherpunk manifesto, and then you have the people that are trying to use this technology for something totally different. It's going to morph into something else. But then again, you'll have something that's regulated, kind of stay this and go this route, but then you'll have this other people, again, smart people out there trying to do nefarious things, do something totally different. It's just going to continue to grow, and it's moving fast. Yep.
Actually, it's Paul Downing from L4S Corporation. I've got a similar question. I mean, today, you go through a broker who then takes your trade to some form of exchange, and then it's cleared through a central authority. In the DeFi world, you go through a wallet service that takes you to a DEX that's basically cleared through Ethereum. So it's actually a very similar model. And my question is that what do we need to do to get the purists to come to the regulated world? They can't reject it outright because their business model isn't that different than today's clearing mechanisms.
Yeah. So the purist, it's hard. Let's go back to blockchain, right? What's the whole point? What's the incentive for them to come? What's the disincentive for them to break the rules? And they're trying to do that with regulation. That's, the disincentives, you get shut down, right? What's the incentive for them to come? What's in it for them? Just to have the eyes from the government on their systems. So maybe we take a play out of the playbook of the purist, right? And also just from I talked about standards, right? I have a big standards background. Think about the ISO standards, right? From ISO. These purists, right, are not going to spend $1,500 for a ISO specification when they're actually, a lot of them are a little bit, I'm not going to, I better not say that. A lot of them are actually more purist in what they do, right? They're not going to spend $1,500 to follow some kind of specification. They're going to do their own thing. So it's going to be hard. I don't know what the incentive is. I mean, that's a big question. What's the incentive to bring the purists into the regulated type of world? Maybe they don't come, right? I don't know what it is.
I'm working on it.
Okay. Cool. Any other questions? I mean, this is great. I love the discussion.
Yeah, my understanding, obviously, and I'm not a financial expert, but KYC obviously has to be done at literally every time you go to a bank. If I'm dealing with one financial service, they have to do their KYC on me. If I go to another financial service, they do their KYC on me. How long do you think it's going to take for us to establish a standard that says we do KYC one time as part of self-sovereign identity, and it just transfers from one financial service to the other? I mean, the cost savings alone, within the institutional framework, has got to be substantial, to drive something like that.
Yeah. And how do you ensure the KYC is done once? And so, look, the KYC is a good question. And as we become more and more digital, right, it becomes more and more harder to protect the data, right, from a cyber standpoint, from cybersecurity. Ultimate is paper, right? Whether people have their own idea about paper ballots or paper money. Paper money is the ultimate anonymity, right? I don't know how you take that anonymity and put it into a world where there's KYC and AML. And maybe you build systems where you have privacy by default, right? And then you slowly start taking back the privacy as you start going to the financial entities and talking to the regulators. You give certain access to certain individuals. Or there's anonymity by default, and you start pulling it back. Or again, transparency by default. So maybe there's a way you guys the community can actually do that. But Again, I think as you everything becomes more digitized and digital, it becomes harder to have the privacy. Goes back to the GDPR, right? I think, Paul, you missed it. GDPR I talked about earlier today. Again, there's privacy and right to be forgotten, right? I guess there's an exclusion for the KYC and AML to keep track of the information. So I don't know how they actually start becoming lateral and one for one. Brian.
So another question, you brought up GDPR. How are we going to manage GDPR compliance when everything is put on the blockchain and therefore it's immutable?
Yeah, but exactly. That's the whole point, right? So again, as I said earlier, those that were at my first presentation, it's late this morning, right? Geez, already. That was yesterday, but no, I'm joking. So with GDPR, again, I think the GDPR is actually benefiting the privacy advocates out there, and compliance with that is making it hard, right? So you have the logical right to be forgotten, right? I'll call up, please forget my information, right? Imagine telling Facebook to forget my. There's no 1-800 number for Facebook, right? You can't call up and say, I want my stuff taken off Facebook, right? You just got to delete it yourself. I think that's right? So anyway, with the GDPR, right? So there is I want to get my stuff taken off, and then there's the physical takeoff, right? Which is much harder. Again, just trying to figure out how to delete all that information and find that person's information throughout the network is hard. Again, from a business standpoint, the compliance behind it. But again, go back, just read about GDPR and AML, KYC. I don't know how they're going to match up. They're probably working on it. I don't know. Maybe they'll come out with the answer with how they actually can deal with that. But it's a hard piece. Right? Yes. Please help.
Hello, I'm Tatiana Revoredo from Oxford Blockchain Foundation. I have an article about it on Cointelegraph. But basically, you have new technologies being improved, like zero-knowledge proof, or you can put all personal data outside the blockchain, and then that's it. But please check my article. Everything is really deep in there.
So proof trust, and also then the oracles, right? You have the stuff outside of the Ethereum network, right? And are you an oracle? Sorry? Are you an oracle? Have you met an oracle yet? Person that's an oracle for the Ethereum that validates the information and sets it back? Isn't that what it's called, oracle? Yes. Yeah. Except for Matrix, that's the only oracle I've known, right? But I think it's interesting. Okay, any other questions? No. Oh, there we go, another one.
Hi, it's Donald Chu. How you doing?
Hey.
Also work for the government. Just a quick follow on the GDPR for getting information. I actually don't believe that's fully implemented currently, because if you know anything about computer operation, you know there are backup and backups and stuff that archive all over the place, right? So you got lots of them still use tape storage. You think somebody's gonna find your particular data in a particular tape storage back in the vault somewhere and delete just that section of it? I do not believe it. So in fact, blockchain is a new solution, actually allow a possibility for selective removal, which currently we really cannot implement given the current operational status. That's one thing.
That's a great point.
Secondly, I did want to mention this since you raised it a little bit about the anonymity. I mean, cryptocurrency currently, starting with Bitcoin, almost all of them are actually only pseudo-anonymous. They're not truly anonymous, right? I mean, there's been a few effort at it and some people trying it at it again. But Bitcoin being so dominant, what do you guys think? Do you think there's still a chance for truly anonymous, cash replacement, currency, digital currency in the current environment? It's a question for everyone.
Okay, cool. Can I say, yeah, they bring up a good point about the blockchain and using it for, I guess, GDPR compliance. Is that right? So the other one is, I don't know, my belief, again, it's just my opinion, right, is you're going to need fiat and you're going to need cryptocurrency. It's the only way they're going to be able to survive, right? It's not totally going to go away, fiat, right? You'll still have I can say e-money, right? Because I don't know, did everybody pay paper money for their lunch today, or they use credit card? Bryant, you're the only one who paid paper money? No, I'm joking. Oh, you pay cash? Oh, cool. Okay. I think everybody else did digital. But I think you can talk about e-money, right? The ones and zeros in our bank accounts, right? And crypto still need each other. That's just my point. And I forgot the gentleman that said that everybody has the internet now. I don't think that's true, but especially during COVID, right? Yeah, I don't know if you guys watched Sunday Morning on CBS, and they're talking about people that I don't know what they're talking about from the, I think it was from COVID standpoint, remote work. They don't have the internet, and they get their news from like PBS. They just have like the old, remember the old fancy antennas? So that's all they have, and it was in the Midwest. It's interesting. And also around the world, other countries mainly have they have mobile devices, but mobile networks, and some of them have internet. So, any other questions? I think this is great. I don't know how much time I have for the economic development. Keep on talking. No, I'm joking. Okay, let's get into economic development. So all the global economies are actually embracing the digital financial services as to help them have future growth and also have global competitiveness around the world, right? China's a big example of that. Obviously, the U.S., UK, EU, they see this technology as having a competitiveness around the world and fighting for the dominance of it. I think China beat us in 5G. Now there's 6G for those who don't know about it. So there's 6G coming out, but we'll see what happens with the next technology. Who's going to take dominance of it? And again, it's all a big race to not race to the bottom, but race to the top. So the global pandemic did not lessen the investments into financial technology around the world. They continue to invest a lot of money, all the countries, into financial technology. But the global economies are also looking at ways from a regulation standpoint and law standpoint, not to dampen innovation, but actually try to embrace it. And they're doing that. It's kind of hard, but they're trying to do that. Like I said, the example with Australia is good. They didn't change any of their laws. They sort of are wait to see. And if they need to change any laws from a consumer protection standpoint, then they'll update the existing laws or amend it instead of creating brand new laws. And the big thing here, all the governments around the world, and someone mentioned already, there's digital ID, self-sovereign ID. They're working on that. Obviously working on wallets. Those that have the Apple iPhone OS 15 on their iPhone. You guys have a digital wallet now. I live in Maryland, and they're starting to do the digital driver's license on OS 15 on the Apple phone. Other states are doing the same thing. Eventually, you'll have your mortgage and other stuff that's digitized on your phone, which is interesting. But they're all looking at distributed infrastructures, those in the DoD distributed data systems, right? It's been around for a while, but actually we have the technology to make it well. And no, forget I said that, because if you really when I started looking at blockchain, I started researching distributed systems, and the biggest distributed system that's been out there is planes, right? A lot of these jets have redundant systems when they have A, B, and C, and then when C goes down, A and B take over until C self-corrects itself. So I think it's very interesting. So it's been out there, but they're starting to do more and more research with distributed networks. Infrastructure. Big one's privacy laws. We just talked about that. Another big one is obviously cybersecurity laws. I don't know if we had a session on cybersecurity. That's pretty big. I think blockchain can be used as part of a framework with other tools to help secure the network. Crypto asset laws. Start working on crypto assets if they can get the definitions right first. And then all these are part of the government's global agenda going forward, or the digital agenda, if you call it. Another thing during the pandemic was the rise of intangible assets. And I'll talk about that definition in a few minutes. But even though the market during 2020 was sort of going down, I have a graph. I do have a graph. The next slide's a graph. And it shows the dip in March, and then just all the investments in what our intangible assets are software products, right? Software companies, not a building or anything. They just sort of took off the investments in intangible assets, right? And again, here's the definition in the second bullet. No intrinsic physical properties such as a building. Computer-based assets, brand name, design, research, development, those are all intangible assets. And it grew during the pandemic. It didn't go away. Maybe everybody was taking their unemployment checks and buying stock. Or cryptocurrency, for that matter. But Let's show you the slide. This one's, again, this is the data. I don't know if you can see that. The data might be a little, again, old, but if you look at, there's not a, is there like a pointer on this thing? No, I guess not. I guess I can point. So over here, you can see in March 2020 right here, have the dip, right? And then after that, everybody started investing. It started going up, dipped down a little bit around September, but everybody was, I guess, at home becoming day traders. And the stock that you see here is just Apple. It's based on, Facebook is the prime on this chart, but you have Apple, Amazon, Netflix, and Google just go crazy because people were investing in it. It's just nuts how it happened during the pandemic. And then the next one, and this gets into the definition, right? People are saying, where do you get the definition for crypto assets as being intangible? But the International Finance Reporting Standards, IFRS, in their June 19 Interpretations Committee meeting, public meeting, gave the definition for crypto assets. It said a holding of cryptocurrency meets the definition of intangible assets as set by IAS 38 on the grounds that, and it goes to A and B. It's capable of being separated from the holder and sold or transferred individually. Does not give the holder a right to receive a fixed or determinable number of units of currency, right? So investments in the cryptocurrencies also rose during the 2020 pandemic. Did it change? There it goes. So here's just an example, and this is has to do with mode banking in Europe. And if you look at it, so it's the black before COVID-19 and then after COVID-19. So the black are Gen Xers, boomers and Gen Xers, and then the red are millennials and Gen Zs. So you can see how much the millennials and Gen Zs have been investing in this is BTC, this is Bitcoin. And then during the pandemic, it just went up as much. So the boomers and the Gen Xs went up 107% during the pandemic. And then the millennials and Gen Zs went up maybe like 6 points, maybe 7 points, to 125 during the pandemic. So before, it was high with the millennials and Gen Zs, and then it just continued after that, investing in it. Yep. Question?
So when you were showing that slide, you use a percentage, but we don't know what the values are that are attached to each of these percentages. So for example, the boomers and Gen Xers could have put in, say arbitrarily, 20 billion, and the millennials had put in 1 billion. And so you look at the percentage and you go, the growth of the millennials is much higher, but it's still dwarfed by the value, the total value of these others. Do you have anything that tracks the total value of these investments?
Yeah, the total
versus a percentage?
Oh yeah, so the total value, if you go to, the link's in here, and again, it's in the white paper, you go to Mode Bank, and they break it out a little bit more detailed. Again, for the point of the paper, try to give a high level, and then it's like anybody, I don't know, is anybody else a researcher in here? You just delve down into the data. So that provides it. So you can go to the link and do that. Again, this slide's 2020, and they'll probably have post-COVID, or if we're post-COVID, right? Tell me we're in post-COVID, right? Say yes. No? Okay. Well, no. Okay, so we're not in post-COVID, so during COVID. So hopefully it have more data, especially for 2021. Again, the paper, I think it's good. It has some historical stuff in it. If you go back to it, I try to update some of these slides before the presentation, and I forgot why it took so long. So it's just straight out of the paper. But you go look at the stuff, you can actually start finding it. I think there's in the report too. We have the Fed's M2 money stock in the paper, but I think the Fed stopped reporting that, the M2 money stock. So you can find it from a historical standpoint. I think you have the line goes all the way up and it just stops. It just sits there. So that's the nature of this data. Again, that it changes so quickly. So going to talking about the European Union. So the trends in the digital finance and innovation of fintechs and also what they call tech fins, have provided new financial tools for the governments, right? Or for the government of the EU, which have both direct and indirect impacts on the European economy. And this is the central bank digital currency, continuously available in interest-bearing wholesale settlements. That's what they're looking at right now. I think they might be looking at some retail, again, from the state member states, but mainly looking at wholesale at this point, well, in 2020. The monetary policy behind it. So the ability to push liquidity into the markets is why they're looking at a digital currency. And then we talk about the algorithms, allows users to support stable coins through recapitalization, mechanism for accounts, lack of collateral, and it goes on from there. Set commission, receive set commission. And then financial inclusion and intermediaries, easy access and disintermediation happens at that point. So I think the European Union came out with MICA in 2000, I think the end of 2020, that talks about a lot of framework that how they're applying this type of technology and fintech in this area. The Middle East. So investment in fintech sectors continue to grow in the Middle East, as we talked about with the regulatory impact. It's evident in increased investment in e-commerce technology, again, due to COVID-19, due to the pandemic, and everybody started doing online shopping, right? So the investment in e-commerce just took off in the Middle East. And just go to the numbers, right? About 105 fintech startups in 2016, and the number was estimated to grow to 205 in 2020. Venture capitalist investments in the Middle East, fintech companies, is expected to grow to $2 billion by 2022. So all those that want to get into this type of business early on, and it's good. I think it's still a kind of a greenfield, maybe not, but so there's a lot of money to be made out there, a lot of solutions, and you hear that during this presentation, and or not my presentation, but during this workshop session, get together. I don't know what it's called. And here's some numbers from the Middle East. This is from Deloitte, and it just talks about that the fintech maturity, that it's actually just growing. So. You can look at it from the fintech maturity standpoint. We could talk about deployment, but how mature is the customers regard to the fintech use? It's just again education of people in the Middle East, and if they use type of what we call financial technology solutions. In Africa, so Africa is the top growing African regions that are offering mobile banking solutions. Infrastructure, biometrics include Kenya, Ghana, and Ethiopia. Again, I think I forgot what it's called in Kenya, but they use the mobile networks. K-Pesa, right? M-Pesa. M-Pesa, yeah. So M-Pesa in Kenya. What's interesting behind that, essentially, they store all their value, all their money on their SIM card, right? And essentially, they take that SIM card almost like their bank account and put it in their shoe, or they wrap it up in aluminum foil and put it in their, in their pants or in their belt or something. So they walk around with these values on the SIM card through this solution with M-Pesa. It's interesting that the banking industry didn't want anything to do with M-Pesa until they saw how much money they made. Now they offer M-Pesa through the banking industry in Kenya. The 2020 Blockchain African Conference highlighted how blockchain technology helped overhaul Africa's trade finance supply chain networks. Again, by, kind of preach to the choir, by traceability, by transparency. Yeah, you can audit it, the efficiency and security than traditional networks in Africa. And cryptocurrency ownership is high. And I mentioned this during the regulatory part. The cryptocurrency ownership is high in South Africa, and it could be by the high inflation rate that's happening in Africa. And I forgot, I think it's like, yeah, there you go, South Sudan rates, it's just crazy, 83.5%. It's just nuts how high the inflation rate's out there, and a lot of them are offsetting that with using the cryptocurrency. Doesn't need to be that high. So here's some examples of cryptocurrency ownership. Worldwide is in, if you can see it, I guess that's what, aqua color, and the other one's supposed to be blue. I think it's blue up there, dark blue. And then you see Ghana, you see Kenya at 5%, right? And you can see Ghana at 6%. Nigeria at 11%, South Africa at 13%. Again, it's just selected countries for the cryptocurrency numbers of ownership. And this is 2020. Let's talk about the Russian Federation. So Russia had the third most developed fintech market in the world next to China and India, which is interesting. The Central Bank of Russia released guidelines for fintech development from 2018 to 2020, essentially to promote competition in the financial markets. So Russian technology, rise of financial inclusion, reduced risks and costs, ensured security and stability by applying these fintech technologies. Like I said, just like China has the 13th, 5th year plan, and then they have other different plans going on too. Russia has the same thing to revitalize their economy, and they're using fintech, blockchain technologies to do that. So Russian citizens, again, this has to do with education and their understanding of financial tech-related services. It's at 82% awareness, and it was between 81 and 86%, according to the 2019 Ernst & Young report. And this, I think I have a picture of it, yeah. Here. Just talks about it, payments and remittances, insurance, InsurTech. I don't think if you have anybody in here who's attended an InsurTech conference, it's pretty interesting. Financing and wealth management. Again, this is just projected growth in the various Russian fintech industry in 2020, 2018 to 2020. Now the United States. So going back to the whole thing during the recession, even though that the stock market rose 55% from March 2020 into October 2020. Again, this is what the numbers are for. Again, there's heavy investments into intangible assets. It's very similar to the slide I showed before, just people investing in Facebook, Apple, Microsoft, Amazon, and Google. So the economic development standpoint, so even though everybody's investing in intangible assets for software companies and stuff like that, it's been Bitcoin and Ethereum and a lot of the cryptocurrencies remain high in development standpoint. This is just showing Bitcoin, Ethereum, Litecoin, and Ripple. You can see again during March it dropped down, but it continued to go up, just like the rest of the stock market during the pandemic. Again, it goes back that it's interesting that the governments are pumping so much money to keep the economy afloat. In the meantime, everybody's investing in intangible assets, investing in fintech and in cryptocurrency. So you guys were busy during the pandemic. And investors, it's from an investment standpoint, invest in blockchain-related companies, and these are actually ETFs here. So again, you see the major dip down around March 2020, and they just continue to go up. People just investing in this stuff. And maybe it's a good sign. Again, people saying that we're going to come out of this and this technology, and we'll be fine with all the financial technologies. And one thing you got to consider too, it goes back to remote work. Everybody's remote work. Is everybody here still remote work? Are we back in the office? So there you go. Are we ever going to go back to work? Yeah, there you go. No. You said Brian wants you to go back to work. Go back to work now. No, but I think it's interesting. But I think a lot of technology. How many of you guys bought new equipment for your home office? Okay. How many people renovated their house for a new office? How many people separated so they wouldn't have to deal with their family in a tough shed? She shed? There you go. So, but yeah, there's I started a new position during the pandemic, and what I did is I moved my monitor to the right side of the desk to the left side of the desk, and that was my new office. So let's talk about Canada. So Canada's technology sector is expected to grow from 2019 to 2027 with demand in machine learning. Now this is interesting. So Canada has been they've been doing a lot of development in blockchain technology since I think 2009 or something like that. I think I have a slide on that on the next page. But they're looking for talent. They're hiring people. Again, the pandemic hurt their economy, hurt a lot of people's economy because no one could travel. But they're looking at talent in machine learning, robotics, augmented reality, virtual reality, blockchain, Internet of Things, and any type of emergent technology that's coming up, I guess now. And Canada's been heavily invested, like I said. I said 2009, since 2012. and it continues to grow. And the ICTC stated that in a report that the number of new blockchain firms have grown 25% in 2019, and they expect it to grow in 2020 and 2021. So here's an example. So, well, I was right, 2008 is when they actually started doing a lot of the blockchain sector growth. And it's hard to see up there, but for example, the dark blue at the bottom is really just cryptocurrency growth. Darker blue above cryptocurrencies, finance and fintech. And then you go further up and you start getting into education, retail, consumer, and supply chain. And then what's interesting is management consultant and law, which is interesting. I don't know how that deals, how you deal with the blockchain. Maybe it's storage of reports or something. Okay, Latin America. So fintech plays obviously an important role in Latin America, economic recovery. And I'm not going to read this whole thing, but it's mainly talking about, it's from the UN, and it's talking about that the UN and the ECLAC, which is Latin America, EC, I forgot what EC stands for, but they're actually investing a lot in fintech and science and technology investment at schools to encourage women and men not to have gender bias, go across the barriers, women and youth, to get more involved with fintech technology and pharmaceuticals and medical supplies. So they're actually invested in this type of technology for, I guess, workplace development. So, but one bad thing about it is I said that the wealth gap's kind of grown in Latin America because of the pandemic. But Latin America traditionally had a lot of I guess, transactions in cryptocurrency, but during the pandemic, they had the lowest growth in cryptocurrency markets compared to the rest of the world. And this is, if you guys know Chainalysis report that came out. So you just see it from above. It sort of dropped down in 2019 and 2020, right? Just talking about the investment of cryptocurrency remittances going into Latin America and money coming out. It slowly started to grow again, but it dropped from 2019 to June, July 2019 to June 2020. Okay, now Japan. Just like anything else, the investments in blockchain-related technologies increased in 2020. What's interesting here is the breakdown here. So the most active areas in blockchain initiatives in this type of fintech technology. What do you think it's in? Can anybody say? It's retail, right? And they're actually big in entertainment, right? So the first one's retail from cryptocurrency or blockchain-related products, and the next one is retail, or I'm sorry, entertainment, because they're big gamers. I guess I don't know if they did CryptoPunks there or not. Next one is Singapore. Singapore is heavily invested in fintech innovation, and this is Singapore dollars, right? 125 million package supports Singapore's broader agenda to establish a fintech ecosystem. And just talks about investments has grown, totaled 661 million in 2019, and doubled that, it's doubled from 2018, due in part into Singapore actually attracting investors, okay, attracting investors. So it just talks about the adoption. If you look at the page, UK was the top from fintech adoption rates in selected markets, and Singapore's second at 67%. But that's trying to have investors come, like Bahrain is having a fintech hub so investors can come in there and do their fintech innovation. Japan has got hit a couple times because a lot of their work with fintech companies, they were kind of making it hard for non-Japanese companies to do work in Japan, but they've slowly been trying to change that because, again, you can't not have other people come in to do work, do business in your country, or you're going to lose out in this quick-paced market. This is talking about just economic development in Singapore, and you can see it that they lead with ICOs in 2018. Well, the U.S. actually led, and then Singapore came in second. Let's see. Got economic development. How long do I have? You said 2 minutes? 5 minutes? Okay, good. because we're going to get into, after Australia, we get into China. So Australia development, they have a digital business plan that provides a digital infrastructure package that will increase Australia's GDP by 6.8 billion per year by 2024. And then they also include additional projected 1.5 billion to regional Australia each year. And it talks about, money going to the 5G network rollout. What's interesting here is 11.5 million of a new regulatory initiative to support digital technology firms in Australia. And then 6.9 million blockchain pilots to reduce business compliance costs. And this is just a report from KPMG, then the next slide, talking about the Australian fintech sector, how it grew 520 million in the first half of 2020, which is substantial increase from 206 million in 2019. It's really small, I don't know if you can see that, but it's just grown. Australia's the second one. It's grown 58%. And so think about China with their development. So the fintech investment in China dropped. When did China start their industrial revolution? You guys know? They started late. They started 1970s, right? So I'm not going to go through all the industrial revolutions, but and they've been heavily invested in any type of technology. So even though they dropped in 2018, they had they dropped 167 yuan, right? Yuan. In 2018 to 12 billion, which is 1.9 million in 2019. But the statements from the government, Chinese government, they're still doing this whole 13th, 5th initiative, and they're doing other digital initiatives too. They want to spur more blockchain technology research in the future, and it's part of their whole strategic vision. You can go out there and look at it. The document's big. It includes a lot of stuff in there. And this slide is just showing you, and this is a little bit different, right? We usually read from left to right. This one's going from right to left. So it's just talking about from 2019 how much R&D expenditure compared to GDP China spent. So China's the light blue, and it's going down to the left. Okay, and this is India. We're wrapping it up now. So India's investment in fintech has continued to rise, right? Fintech startups receive about 117 billion, 1.6 billion in U.S. in 2020, and has increased from 2019 of 726 million. So the fintech deals, which is interesting, in Q1 of 2020 equaled 1 billion and 646 million respectively, right? This is up from 454 million in 2019. So again, it's just showing all these reports and all this information, just showing that they have investment and capital investment, and investors are working in each of the countries. And it really ties to their regulation. The regulation is not that tight on a lot of these. With their ban, if they're banned, then they don't have that many people investing in it. But what's interesting with India, they didn't have really a stance on cryptocurrency. And I think I think they sued the central bank, or they sued the Minister of Finance to get some type of results back on a comment about cryptocurrency. And I think it ruled in favor of cryptocurrency. And then once they did that, all these investors were invested in India's blockchain and cryptocurrency markets. And just this slide just shows that there's venture capitalist investors are still looking to India as a long-term investment. And these are some of the investors that are part of the blockchain ecosystem in India. And is that it? That's it. So it's a lot. It's a lot, people. So if there's any questions, just let me know. Are you guys thoroughly asleep? There's a lot of information in such a short time, right? There's a lot of information in the paper. You can download the impact of cryptocurrency adoption on government. It's on the GBA website. The data that's in this report it's already historical. It's already old, but you should actually look at it from a historical standpoint. It's very good. And then feel free to email me anytime. There's a lot of stuff. There's other white papers coming from GBA. As I mentioned, we're looking at doing a paper from how the coin networks can help from a human rights standpoint. So expect some other stuff coming out, and hopefully you guys have a good rest of the session. Thanks.